Hello, everyone, and welcome to today's webinar. We're going to present the survey responses to the second survey that was conducted earlier in the summer. We're going to go through the presentation in a moment here. Just a couple of housekeeping items first. As we go through, if you have any questions, please enter them in the chat box. We do have time at the end of the presentation set to handle answering some of those questions. So let me go ahead. So without any further ado, I'm actually going to turn this over to the Green Bank's President and CEO, Brian Garcia.
All right, good afternoon, everyone. So I am stepping in as the Master of Ceremonies today with my colleagues, Liz Murphy and Ron Arugio. I'm stepping in for Eric Brown, who's got a number of things that are just going on right now, lots of fire drills. So I will be master ceremonying today. Just want to welcome you all to today's webinar. In terms of our agenda for the morning, I'm going to introduce you to the Joint Committee and today's speakers in a moment. I want to point out that today's webinar is going to focus on the second survey that was conducted in the latter part of June, early part of July that Rudy had mentioned. I also want to emphasize that there will be several presenters sharing sector-specific findings today. So Liz, Ron, and myself will be digging in a little bit more into that data. And then if you do have questions, feel free to either raise your hand or note them down into the question box, and Rudy will keep track of them and keep us going. Okay, next slide, Rudy. So on the Joint Committee, so the General Assembly created the Joint Committee to ensure that the programs and activities of the Conservation and Load Management Fund and the Green Bank were being coordinated. We've got a principal statement for our Joint Committee that serves to guide our work, which is essentially to support the implementation of state energy policy across all market segments, and we're going to talk about a few of those segments today. While increasing more private investment and ensuring that the consumer experience is good. Our next Joint Committee meeting, for all of you who are interested, we do meet quarterly. We'd invite you to attend, is Wednesday, December 16th from 1:30 to 3, and it'll be online. So you're welcome to join that. If you're interested, just send one of us a note. I'm sure you are all in communication with us. Eric Brown is the chair of the Joint Committee, and he represents one of the two members on the Energy Efficiency Board, and he also serves on the board of the Connecticut Green Bank. Let's go to the next slide, Rudy. Excellent. So just want to mention that we, as a Joint Committee, are wrapping up our first clean energy job study. So we're in the process now of pulling the final pieces together. We're probably 99.5% complete. We expect to release the report in the early part of October, so stay tuned. It will give you all a sense of clean energy jobs through 2019, and of course, we've got some updates in that report with regards to the COVID-19 impacts on the job market. Next slide, Rudy. All right, so just give me a second to introduce the members of the Joint Committee. So as I mentioned before, Eric Brown, who is the Vice President of Manufacturing Policy and Outreach at CBIA, is the chair of the Joint Committee. He represents the Energy Efficiency Board. There are two members of the EEB on the board. The other member is John Biglione, who is an economist with the Office of Consumer Counsel. Of course, we have an ex officio DEEP representative, Mike Lee, who is the Bureau Chief of the BETP, the Bureau of Energy Technology and Policy at DEEP. He's also the vice chair of the Joint Committee. He's on with the call today with us this afternoon. And then there are two Green Bank representatives to the Joint Committee, John Harity, who's chair of the Connecticut Roundtable on Climate and Jobs, and Brenda Watson, who's the executive director of Operation Fuel. And then, of course, supporting all the board members are the non-voting staff members from the utilities. So Liz Murphy, Ron Arugio, Steve Bruno, Jane Leno, you know, we're all here, Bert Hunter, we're here to support the Joint Committee. If you have any questions about the joint committee, totally feel free to ask in the joint in the chat box as we move through the presentation. And again, I just want to reinforce we've got our next joint committee meeting on Wednesday, December 16th at 1:30. Okay, next slide, Rudy. All right, so let me introduce the presenters today. Liz Murphy will be representing Avangrid. Ron Arugio will be representing Eversource, and I'll be representing the Green Bank. And we're gonna share responsibilities in terms of the presentation on the findings of the survey today. I will lead us off with a high-level overview, and then we're gonna start to dive into sector-specific findings. So why don't we jump in, Rudy, go ahead and take us to the next slide. Great, so I'm gonna provide an overview of the survey in general and some of the high-level findings. And I want to acknowledge Rudy, who is on this call, and Barbara for assisting with the survey development, administration, and analysis. So a lot of the work behind this is being led by them. And they've done a great job pulling all that together. We're just going to present it to you. So thank you, Rudy and Barbara. All right, so the survey. So the survey was developed by a number of different parties, the Governor's Office, DEEP, the Green Bank, Eversource, and Avangrid. The first study, we had Advanced CT and DECD involved. We actually had some overlap of our surveys in the first go around. But the purpose of this survey, which was the second survey, was to follow up on the first and continue to understand the challenges that the clean energy industry is facing with respect to COVID-19 so that we can continue to identify ways to help and assist with recovery efforts. Let's go to the next slide, Rudy. So the second survey, as I mentioned earlier, was held in June, in late June and early July. That was a follow-up to an April survey. We had a reasonable number of responses on the second survey. We had a higher response rate on the first, but we still had a good response for the second. Like the first survey, there were predominantly business owners who responded, and CEOs, presidents of companies, more than 50%. And then we also saw managers at nearly 30%. So decision makers actively involved in responding to the survey, which gives us a top-down view of company perceptions on COVID-19 impacts to their business. This survey was a little bit longer than the last one. It had 8 more questions with a high response rate. And just want to go ahead and go to the next slide. Thank all of you who responded to the survey. We had 76 unique companies that responded. So thank you all to you and your teams for responding to the survey. Next slide. Here's who you are in terms of the industries that you represent. We had a higher response rate in the first survey than the second in terms of the solar PV industry, and a similar response rate from the efficiency industry between the 2 surveys. We use this data in terms of who is responding to help us discern how your businesses are doing, within your respective sectors. So you're going to hear us talk about the commercial efficiency space, the residential solar PV space. We're going to dive into specifically how COVID-19 is affecting your sector, and we're going to share those results in a moment. Next slide. So COVID-19, even though we did this survey several months after the first, and we're now, a month to 2 months after this survey, COVID-19 is still detrimental to clean energy small businesses. You're down from 8 out of 10 to 7 out of 10, still quite detrimental to the businesses, to your businesses. Several of the companies still have 10 out of 10 and 9 out of 10 in terms of detriment, COVID-19 detriment to your business. So we want to continue to understand what areas we can help to reduce some of that detriment. So do please send your chats in or send your comments in, and we'll continue to understand them and try to address them in ways that we can. From a public health perspective, COVID-19 is, from your perspective, you can see a little bit more under control, although we're still managing through it. The top 5 most pressing concerns were exactly the same. The Loss of pay for employees or household members is down, but still the top, priority. Loss of jobs for themselves or household members, 51% down. Potential for workplace exposure to COVID-19. I think we're going to see this a lot, as well as, kind of how our employees are managing personally and professionally. For example, inadequate childcare, you can kind of see it flat. So we're going to go through some of these things and you'll be able to see them from a sector specific perspective. All right, next slide, Rudy. Great. So how has your business been impacted by COVID-19 in terms of its employees? What you're looking at here are 3 data sets. So in yellow is the second survey, in green is the first survey, and the gray is actually a data set from the first survey that was statewide. So DECD asked this question of small businesses statewide. So what we see here is that we're comparing not only the second survey with the first, but over time, what you can see is that the clean energy industry has improved in terms of employee schedules reduced and less layoffs, with furloughs remaining the same. So the green line kind of approaching where the state was in small businesses in the first survey. All of this is to say that this is not to say COVID is over. This is to say that you all are dealing with it better. In the first month, it was extremely detrimental. And these results still state to us that this is a massive problem that is destabilizing. But again, we want to continue to understand and to support your businesses as you're working through these times. Next slide, Rudy. So how much is new business down compared with this time last year? I think if you looked at the survey 1, that's just extraordinary, to see 60%, greater than 60% business down year to year. And looking at where we were in the second survey, at about, let's say 40% on average, that's still detrimental, right, to your businesses. 40%, you wouldn't have said last year that 40% business down next year was going to be good for your companies. And that's kind of where we are, at least through this survey. So we realize that you're still being significantly impacted in terms of new business from year to year, even as we've improved COVID-19, addressing COVID-19 within the state. The next slide, Rudy. What percent of existing projects, purchase orders, contracts, or finance have been either delayed or canceled? So this is kind of like what you had in your hand. And it looks like we still, you still lost a lot of business as a result of COVID-19, right? So we didn't see much drop. There was some drop from where we were in April, but this says that you lost a lot of business and that COVID really slowed you down in terms of where you were. Next slide. So let me read you the 2 questions that we were dealing with here. The first one was how many months, and this came from the first survey, how many months after the stay-at-home order is lifted will it take for your business to recover? That's the top line within each of these sections here. And then the second survey asked the question of, assuming no significant new disease outbreaks or any new restrictions on business, how many months from now will it take for your business to recover? So we tried to break down this data in terms of the key segments that we're going to talk about in more detail today. In general, things have gotten better, meaning there's less yellow and red, less 6 months to 1 year recovery time, and more blue, orange, and gray, which is up to 3 months. But we do see black here, which is that's never going to recover, which is a big worry for us. So we're conscious of that. Next slide. So a couple of things going on here. We wanted to get a sense of the Paycheck Protection Program. You might recall from our April presentation, and a number of the things that we were doing back then was promoting the Paycheck Protection Program. Nearly 3 in 4 businesses moved forward with the Paycheck Protection Program, with nearly all of them, I think but one, was successful receiving the loan. The program has closed. It closed on August 8th. They're no longer taking applications into the program. With respect to the PPP, does your business expect to use most or all of the loan and expect it to be forgiven? Nearly 80% of you expect that most, if not all, of the PP loan will be forgiven. The extra time and extension of the PPP was good for many of you. Again, in the early days of April, everyone was scrambling to try to get access to resources. The extension of the Paycheck Protection Program for round 2 was very useful for all of you, and the access to local financial institutions to access that, for example, through Nutmeg Credit Union, Mutual Securities Credit Union, may have helped you all as well. Many of you used the Paycheck Protection Program to immediately hire back about 50% of your workforce. And of those who weren't hired back, you believe that 60% of those laid off or furloughed are also receiving some unemployment benefits. In Connecticut, just a high level on the Paycheck Protection Program, about 65,000 businesses took advantage of the program, receiving $6.7 billion in loans for an average loan size of just a little over $100,000 per loan. So it helped our businesses manage through that period of time. Let's go to the next slide, Rudy. We raised a number of questions in the survey about part-time employment. Questions like, before COVID, what percent of your employees were part-time? At this point in time, what percent of your employees are part-time? What we wanted to do was we wanted to get a sense for part-time workers from you, but we had a low response rate in this line of questions. And for those of you who did respond, part-time employees are few within your respective organizations. There is a state program that we wanted to get a better sense of, whether or not your businesses was taking advantage of it, which is why we asked the question. And questions like, are you familiar with shared work or short time compensation? This is a program that's part of the state's unemployment system and can help pay a portion of the wages if a company has to move workers to part-time status because of economic or business difficulties. So we added a number of those kind of questions around the state program, and it was clear that the clean energy industry is not fully aware of this program. At about 40% of you were aware, the respondents were aware, and that for those of you who were aware, only one took advantage of the program. So what we'll do as a follow-up to this webinar in our email notice back out is we'll provide you links to the program so that you can, if you're interested, find out more information about it and seek assistance if appropriate. Next slide, Rudy. All right, so many of your businesses are taking action at this time to ramp up business activity, which is great. What actions have you found to be most effective to drive your business? So obviously, like front and center, promoting health and safety work practices that your business is providing is key to your success. So if you do need more PPE, let us know. The Connecticut Business and Industry Association still has their exchange that we talked about last time. So if you need to connect to access more PPE, that'll be very important. We'll also note that in our follow-up communication. That was followed by, promoting increased levels of incentives that have gone on in programs, and increased customer outreach to schedule or reschedule jobs. Jobs were put on hold, so now getting back out there to reschedule those jobs and getting them going, as well as additional marketing to help acquire customers, are really significant to help move things in the positive direction. So that is a general overview, a top-level overview of the survey responses, kind of everything consolidated. Now, what we're going to do is delve deeper into industry-specific findings, and we're going to start off with Ron Arugio from Eversource, who's going to provide us with an overview of the residential energy efficiency market. So we'll turn it over to you, Ron.
Okay, thank you, Brian. Okay, good afternoon, everyone. This first chart here, or this slide, shows basically the survey summary for the residential energy efficiency contractors. On the left-hand side, you'll see the results from the first survey that was completed. And then on the right-hand side, you'll see the survey results for the second survey that, as Brian mentioned, was completed in the late June, early July timeframe. And I think what it's actually showing us here for the residential energy efficiency contractors is that it was a market still adjusting, but in an upswing mode at that time. This is a time when we were just introducing and training contractors on health and safety guidelines so they could work safely inside homes and businesses. And I think what this chart is showing is some of the optimism associated with that. However, businesses were still reeling from that, what happened due to COVID. What I also think is important to note here is that if you take a look at the recovery timeline, you'll see that the recovery timeline has decreased. In particular, where in survey 1, 50% figured it was going to take 6 months. If you look at survey 2, that was down to a third, with the other third being shifted to earlier than 6 months. So I think, while still pessimistic, I think it shows some of the optimism of getting back to work. And I think, if we were to do the survey today, it would even be more optimistic. Next slide, please. Okay, on this one right here, this shows the COVID-19 impact on employees. And I think the results are indicative of the business climate that is beginning to improve or recover. What you're seeing is that furloughs and layoffs in the residential EE space were down. You're seeing, an increase in hiring. There, 20% shows an increase in hiring. And then you're also seeing a slight, increase in employee schedules being increased. So overall, you're seeing companies getting back to work and bringing employees in so that way they can go back and do their jobs. Next slide, please. Now, on this slide, it's basically giving us another perspective of what was happening on the employee side. And what you can see here is that nearly half of the employees were back on site, and that furloughs were ending, essentially consistent with the previous the slide. And a lot of this, I believe, has to do with the fact that there was an implementation of those health and safety guidelines that has allowed on-premise work to resume, and hence the energy efficiency contractors can get inside the home and do the work that was needed. Next slide, please. Now, the vast majority do expect to grow back to their previous side or larger. This is consistent with the recovery timeline that was presented a couple of slides earlier. I think it shows that optimism that with the businesses being able to return to work, they're able to resume their services, and that is showing through on this slide right here from an optimistic standpoint. Next slide, please. This slide right here is very telling from the standpoint that it's showing in the residential EE space that the optimism is there, that the vendors were seeing some of the customers they were not able to serve during the moratorium on going inside the home, that they're being able to serve those customers plus new customers, and they're seeing higher demand, or demand at least equal to 2019. What I think this is also indicating is that we had worked with Deep on revamping rebates and incentives that has helped generate custom demand, and that demand for services has essentially fueled the business optimism that we're seeing here displayed in this chart. Next slide, please. Now, what are the most pressing needs for residential EE? If we take a look at what is the ones that we would have influence on, we'd be looking at things such as PPE, personal protection equipment. We'd be looking at the reduction in customer demand that's located about top center of that chart. And what I think we're seeing here is that by helping spurring the demand and by implementing some of these limited time rebates and incentives, is provide not only near-term customer demand, but that demand is helping businesses hire and purchase new equipment due to longer-term confidence that the businesses will be able to be sustained. So I think that's really important that what we see here. And I think what we've been able to do in particular is help them on the PPE side by working with the contractors to develop alternative protocols to help maintain safety, health and safety for not only the workers but the customers. And that has also shown through in consumer or customer confidence. And I believe that that holds true with what, one of the earlier slides that Brian presented. Next slide, please. And Brian, I think you're going to take it over right here, correct?
Perfect. Yeah, thank you, Ron. So we're going to transition to HVAC contractors, and just in general. So these are contractors, typically small family-owned businesses who are serving kind of the masses across the state. You're typically using the Smarty loan, so there are a number of you. So we're going to go through this in a second. And again, I'd invite all of you. You know, this survey was done, finished up 2 months ago. So a lot has happened since. So totally chat us, what, as we're going through these slides, your sense of where you think things are. That'll bring us up to date. We talk to you all frequently, so we've got a pretty good sense. But just continue to orient us with questions or chats as we move forward. So on the traditional HVAC contractors, really interesting sector. You can see here this sector. This was probably one of the lowest detrimental impacts in the first surveys that we saw, and then you could see them adjust more 2 months later following the second survey. And then with regards to their recovery timeline, just as we saw in Ron's data on the EE contractors, we see that here with immediate, 1 month, 3 month, being able to respond to recovery. So these are all good signs for this segment of the market. Let's go to the next slide, Rudy. So again, what we want to see here are the green bar moving to the left, which is good. So employee schedules reduced. We're seeing less of that, which means employee schedules are being increased. Less employees laid off. We talked earlier about the PPP. We think that a lot of you took advantage of that and rehired employees. So again, a general trend in the positive direction that we'd like to see, and we'd expect this with, at this period of time in July, Connecticut getting its arms around COVID-19, and we're steadily chipping away at trying to handle this public health crisis. So these results are indicative of that. So good improvement. Next slide, Rudy. Employment conditions are steadily improving. Schedules are being increased. On-site work is growing. People being called back from furloughs, good. And in some cases, as Ron noted too, you're hiring employees, which is great. Let's go to the next slide. Again, an optimistic outlook on your business once business conditions improve and we get COVID-19 under control. I think when we looked at this 2 months after the first time we did this, it was completely like your all's view on the future was really tough. I'm sure it's still tough, but it got better over time. So it's good to see that you want to grow back to the same size or larger. That's what we want to see, is economic growth. Next slide. In general, a positive outlook on demand versus last year. 7% of you say demand is lower this year than last year, and 43% say lower than last year, but it's increasing. Versus 14% who say there's higher demand this year than last year, with 36% saying that demand is the same this year as last year. So uncertainty, right, that you all are experiencing within your respective businesses in terms of customer demand. All right, and just wrapping up, next slide here. Next slide, Rudy. what are your most pressing needs that state government could help you with? So, this is one of those important survey questions that really tells us where we can help provide assistance. We can see big changes here in July than back in April with assistance. Right now the focus is more on securing PPE and continuing to want to know what other types of assistance is available. That's important for you as HVAC contractors. So again, we will follow up with the communication after this on some of those other resources for you to look into and then connect you to some of the PPE because that's important to maintain the safety of your staff and the safety of your customers. Okay, Rudy, let's go to the next slide. I think I'm going to continue here with the residential solar contractors. So we're just kind of moving through the residential sector here. Next slide. So similar to the HVAC contractors, the detriment of COVID has gone down over time, which is great. As I mentioned earlier, we are seeing improvements in terms of the timeline to recovery. But this is one of those data points where we probably should have highlighted it here. 12% will never recover. So of the respondents, some of you believe that you're just never going to recover from COVID-19, which is something that we have to watch to make sure that we're giving that all of you as businesses have the opportunity to continue to not only stabilize yourself but grow. So that was a concern for us. Next slide. How has your business been impacted by COVID-19 in terms of employees? Again, we want to see the green line move left here, or in this case, employees working remotely was pretty static. Employee schedules reduced, came down, which is good, which means that you increased schedules. Furloughs grew, which is kind of interesting. I'd be interested in knowing what you all think about that. And employees laid off, flat, which is kind of like, oh wow. So be really interested in your insights on what you're seeing there from this chart. Next slide, Rudy. Employees are returning on site, and furloughs, are slowing down. People are being called back. On-site work is growing. Schedules are being increased, and in some cases, you're hiring employees. Next slide. In general, an optimistic outlook on your business once business conditions improve and we've got COVID-19 under control. However, 40% of you are still uncertain, right? So the blue and the green slices here, that's a big concern, that uncertainty. So when you're looking ahead and you're trying to plan and you see things like the phase out of the investment tax credit or the wind down or the transition from net metering to a tariff, these are creating uncertainties for you. And that combined with COVID, we think is causing this disparity with this segment of the market. Next slide. So just the continuation of that, kind of uncertain outlook on demand versus last year. I really wonder if we had done this survey today, if it would show improved demand. We went through a lot of awareness over the last month or 2 months with a lot in the press on rate increases, Tropical Storm Isaias. So I wonder actually if you'd say demand was increasing as a result of that, customers being more aware of their energy consumption. So type that in, let us know what you think. We'd be interested in that. Next slide. Just kind of wrapping up this sector here. Again, we're moving in the right direction. The uncertainty here is really around customer demand stalling, and then uncertainty around the federal ITC and the state incentives. So you can kind of see that. And of course, we know there's one's going down and there's uncertainty in the other. So with that wraps up the residential sector. I'm going to now turn it over to Liz Murphy, who's going to kick us off here on the commercial energy efficiency side.
Thank you, Brian. Next slide, please. So on a scale of 1 to 10, based on the survey results, we found that our commercial vendors operating in the energy efficiency space responded to the survey and ranked 9 out of 10 frowns with respect to how detrimental COVID-19 has been to their business in Connecticut. And this, as you can see, this rating remained unchanged from the last survey, which I think means that contractors are still experiencing negative impacts. The ramp up and recovery is occurring at a slower pace than was originally anticipated, and there's still a lot of uncertainty in the marketplace. And when we asked how many months after the stay-at-home order is lifted it would take for business to recover, 55% said it will take up to 6 months to recover, and 45% said it will take up to 12 months to recover. Unfortunately, the recovery time, as you can see, increased from the last survey when 30% said it would take up to 3 months and 61% said up to 6 months. And on average, our small business vendors responded that 36% of work can be completed outside, while the remaining 64% of work requires indoor access to a facility. We did see that the percentage of outdoor work being completed is slightly higher than what was reported on the first survey, which I found to be interesting and a good sign, because it shows that efforts were being focused on completing work in spaces where you could properly social distance and continue to deliver projects despite any restrictions with respect to indoor work. So that was a good sign. Next slide, please. So COVID-19 has impacted our commercial contractors, and in particular our small business energy advantage program vendors, in a variety of different ways. And when we asked how business has been impacted by COVID-19 in terms of employees, at roughly 73%, the percentage of small business vendors that have furloughed employees is slightly lower than last reported. However, on the flip side, the percentage of vendors that have laid off employees has significantly increased, and you can see that it jumped from 47.37% to 82%, which tells us that from a staffing perspective, the commercial contractors have really been negatively impacted in a big way as time has passed, and more vendors have had to lay off staff. So certainly some unfortunate results here. Next slide, please. So about half of the commercial contractors responded that they have some of their employees working on site. About a quarter responded that they called employees back from furlough, which was reflected in the data we just saw on the last slide, since the percentage of furloughed employees has decreased slightly from the last survey. And also something that's interesting to note is that about 5% of vendors have hired new employees. So even though we saw vendors who were having to lay off staff, we also saw some growth for certain companies. So I'm optimistically speculating that this could be because they're bringing on additional resources to ramp up, or alternatively backfilling positions for employees who may have moved to another role, a company, or even onto another industry. But regardless, I think when we see that new hiring is occurring, it's generally a sign of growth, which is the direction we want to see things head in. Next slide, please. So with the rebounding of the energy efficiency sector, and as business conditions start to improve, the majority of commercial energy efficiency contractors are not sure how quickly they'll be able to grow and if they will be able to hire. So I think, the fact of the matter is that there's still too much uncertainty, and the recovery isn't happening quite as quickly as we were expecting it to once on-site or on-premise program restrictions were lifted. So contractors really aren't sure what the future looks like, and it's difficult for them to plan accordingly. But despite the uncertainty, about 30% are intending to grow back to at least the same size that they were pre-COVID, and if not even larger. So that, I think, is certainly encouraging to hear. Next slide, please. So we asked contractors how they would rate customer demand since June 1st, and at 73%, this is lower than what you saw on the residential energy efficiency slide, but at 73%, the majority responded that customer demand is lower than this time last year and not increasing. So definitely a distinction there between the residential and commercial sectors. The other 27% responded that customer demand is lower than this time last year, but is increasing. And I think this checks out with what we're seeing from a pipeline perspective. We've observed certainly a lower volume of new leads and signed projects than what we typically expect to see this time of year, but there are some indications that activity is starting to pick up. And I think particularly as we've introduced the increased energy efficiency incentives, as well as some other enhanced financing offers and more flexible program solutions for customers, we're starting to see a slight uptick in program activity. So I'd be interested to see how the percentages here change over the next few months. And lastly, the next slide, please. Thank you. Our vendors were asked to select their most pressing needs that state government could help with, and at the top of the list is still cash flow, followed by reduction in customer demand due to coronavirus, financial issues, and health risk of contact with employees. So this, for the commercial sector, this order is exactly what we saw from the last survey. And going into the survey, we did have a feel for the most pressing needs, but it was certainly helpful to have additional visibility into the ranking of those needs, and also to see that they largely remain the same for over the past few months. So we hear the feedback loud and clear. The utilities are continuing to work closely with DEEP, the Energy Efficiency Board, vendors, and other stakeholders to implement COVID-19 recovery efforts to ensure that we can continue to support our commercial vendors, certainly focused on rebuilding the pipeline as quickly and robustly as possible.
All right. Thank you, Liz. Thank you for that. So just kind of wrapping up here, I think what we'll see here in the commercial side is a similar message as Liz just delivered, but from a solar perspective, it may be, or it may have been that during this period of time, you all were getting geared up for round 9 of the ZRAC 2. So that could also impact some of your responses. So we're getting close to the question portion. So if folks could start thinking of questions and just chatting them in, that would be great. Rudy, go ahead and kick us off. All right. So on the commercial solar side, you can see again here, steady progress just in terms of things getting a little bit better on the detriment, although as we go through some of the data coming up, I'm not sure it's all smiles or less unhappy faces. In terms of recovery, we're seeing things move into the right direction, but still, as we'll get into the data here, things are a little bit slower on the commercial solar PV side. Next slide. So, here we want to see things moving, to the left, employees working remotely. So it means more are, on site. Staffing changes, we're actually seeing more staffing changes. Employee schedules reduces is pretty flat. Employee layoffs is lower. That's good. That's a sign of PPP. Hiring employees is good. So kind of a mixed bag a little bit here on the commercial solar PV side. Next slide, Rudy. Here's a sector where limited staffing changes were dominant, kind of as we can see here with 34% with no staffing changes. Schedules are being increased. There is more on-site work happening. People are coming back into the office, and in some cases, you are hiring employees. Next slide. In general, an optimistic outlook on your business once again business conditions improve and we get COVID-19 under control. However, about 40% of you are still uncertain. This is kind of a big a concern. There's a lot of uncertainties, as I was mentioning earlier, in the solar market. Federal ITC coming down, round 9 of the small ZRAC competition. You guys were probably all preparing your applications at that time. And then, of course, as we think about the transition of moving from net metering to a tariff. So lots of uncertainties happening in the behind the meter solar market in Connecticut. Next slide. This is similar to other findings that we've seen in prior sectors. Demand is down, but steadily increasing. And let's wrap it up with the last slide here, Rudy. So again, getting to the question of what are your business's most pressing needs that state government can help with right now, and this is very similar to what Liz was presenting. Cash is important to you. Payroll is the key item for your sector. And as well as managing through canceled orders or your demand. So that's a big issue. Again, I'd be interested in hearing from all of you about how business has gone in recent months, and how things are going with your round 9 ZREC applications. How's demand going, and how you're looking ahead at round 10. So I think that's it. I think we're now in the Q&A portion of the webinar, and I will turn this back to Rudy to coordinate us on through.
Thank you, Brian. Thank you, Liz and Ron, for your presentations also. The first question, are we planning to do a third follow-up survey to capture what's happened since July?
A good question. So I think we should. We haven't talked about it. I'd be interested in Liz and Ron's perspective. We're about to release the study that we mentioned earlier, perhaps following that with another survey. We tend to do them, every 2 to 3 months, kind of in this gap. So we're in that period of time. We think it will show gradual improvement in the right direction, not total improvement, right? But I will note that and take it back to the group and discuss it with the group. For each of you who are responding, it was a 10 to 12 minute survey, so it's a lot of time on you, but I will take it back.
Okay, so we have a question. It's not exactly COVID related, but I think we'll see if any of you guys have any thoughts on it. If you've heard from other contractors hearing the same thing, but the question is, are any other businesses noticing an increase in renewal premiums for GL and umbrella insurance coverage? The asker writes, it seems that insurance companies are increasing premiums or pulling out of the industry as they're trying to manage their in-force risk, and says that they were hit with a 365% increase in premium due to their carrier pulling out of the industry.
Wow. Interesting. Maybe I'll start off, but this is definitely something we should take back. With everything we've seen on climate impacts, the hurricanes, the wildfires, I think we're definitely seeing the insurance industry risk rise over the last couple of years. So I would anticipate that insurance coverage is going to be harder to get or increasingly more expensive. So I would suspect that that's a driver happening here, or one of the key drivers, but would be interested in Liz and Ron's perspectives as well. If not, we could take the next question, Rudy, and I'll take it back and see what more information we can find out about.
Yeah. Okay, I'm scrolling through the questions right now, seeing what, so this is sort of more a comment, a couple of comments actually from the energy efficiency non-resi contractor side of things, that they've seen a pickup in demand due to the support and incentives provided by DEEP, the EB, UI, and Eversource. Since Survey 2 was conducted, the recovery has been somewhat uneven, with customers hesitant to sign because of uncertainties of their businesses. And the biggest problem for small to mid-sized contractors currently, cash flow, with the PPP running out and delays in sales and installations. But does mention that Eversource and UI support and faster turnaround of payments has been helpful, and that milestone payments have been appreciated. This commenter also actually mentioned about the seeing a much higher increase of healthcare premiums in the low double digits, higher than the 5% average that has been reported. So another insurance-related increase affecting the businesses.
So healthcare and liability. Okay, we'll take those back. But good comments, Liz. Ron, anything else you want to add on programs and things coming out, or things you want to inform folks on?
Well, Brian, this is Ron. The only thing I guess is circling back to one of the initial questions regarding whether there'll be another survey. You know, there might be a lot of value in doing that, because as we're going through this, we may, you know, I think as we're seeing directly firsthand, the business climate is improving, but I think it would be good to also determine what other issues might be popping up, because I know from talking to residential contractors and suppliers, we're starting to experience some equipment shortages in certain areas. And so how, you know, is that starting to have a detrimental impact on businesses? So there may be some value in following up with, you know, how is this impacted their supply chain that's critical to these businesses?
Yeah, and I'd like to add that the comment about recovery happening somewhat unevenly across vendors, you know, and the fact that there are so many customer concerns right now is something that we're definitely aware of. And I think it's really important for the utilities to understand, for vendors who are more successful in their recovery efforts and are bouncing back more quickly and able to ramp up program and project activity, what are they doing that's working so well, and is that something that we can you know, gather and replicate across other vendors that are struggling? So I think having more specific information about why some vendors are doing well versus others who are struggling to survive right now will be really helpful, and will allow us to you know, potentially modify program guidelines and adapt our programs to this ever-changing environment.
So we did get a couple of other comments that I'll put out there. We're seeing an increase in Resi sales as they typically close and install more quickly while we're waiting for our commercial projects to commit to sales proposals. So that, you know, might explain some of the recovery in one sector versus another. Additionally, another comment that says diversity programs utilities are developing will be helpful, plus virtual audits to help.
Okay. Good feedback.
So we've answered all the questions that have come in, and those were all the comments that we've had at this point. So we'll give it another minute if there are any other comments or questions that folks want to enter in. We will be sharing the presentation, the recording, a link to that, and you know, these slides in the next, you know, couple of days or so. So that'll come out in a follow-up email. So Brian, if you or Ron or Liz have any other comments, I think we're at the point where we can wrap it up.
Excellent. Yeah, so thank you, Rudy, for working us through this. Ron, Liz, thank you. We will take all those comments back. I do think we should do the survey now, but it does feel, Ron and Liz, like we have another line of questions that we need to dig into and figure out. So thank you all for that advice and feedback. Keep it coming. That helps us to help you. We wish you all, you know, growing business and health as we continue to navigate through this public health crisis. But why don't we leave it there? And like Rudy said, we will get this out And if you have any questions, comments, you'll feel free to just throw them our way.
Great, thank you all. Have a good day, and we'll be sharing this in the coming days.